This dividend ETF is outperforming every dividend ETF, 2 times the returns. Have you ever looked at your investment portfolio and felt a quiet unease? That nagging feeling that perhaps your hard-earned capital, your life savings, isn't quite performing as robustly as it could be? You've diligently saved, carefully planned for retirement planning. But in today's dynamic financial market, the landscape constantly shifts. Many traditional income streams simply aren't keeping pace with the rising cost of living, leaving you wondering if there's a more powerful way to achieve true financial security. You desire not just stability, but genuine financial growth that propels you towards financial independence. Imagine for a moment that your money isn't just sitting there, earning modest returns. Instead, picture it as a finely tuned engine, not just producing a steady hum, but roaring to life, actively generating wealth creation for you, day after day, year after year. That's the power we're going to uncover today. We're going to talk about a specific type of dividend ETF that has not just kept pace, but has truly outperformed its peers, delivering potentially double the returns. This is not about fleeting trends or risky ventures. It's about a strategic approach to long-term wealth accumulation. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. Unveiling the powerhouse. What makes this dividend ETF different? Now you've likely heard of exchange-traded funds, or ETFs. Think of an ETF as a diversified basket, holding many different companies or assets within a single, easy-to-manage investment. And a dividend ETF specifically focuses on companies that consistently pay out a portion of their profits to shareholders, providing you with passive income. But here's the crucial distinction. Not all dividend ETFs are created equal. Many focus purely on the highest immediate dividend yield, often at the expense of capital appreciation. They might offer an attractive payout now, but the underlying value of your investment could stagnate or even decline. That's like focusing solely on the fruit on the tree, without ensuring the roots are strong and the tree itself is growing taller and bearing more fruit each season. The dividend ETF we're discussing today, however, plays a different game. It zeroes in on companies that not only pay dividends, but more importantly, have a consistent track record of increasing those dividends year after year. This strategy is known as dividend growth investing. It means you're investing in fundamentally strong businesses, those with sustainable earnings and a commitment to returning value to their shareholders. This isn't just about the immediate cash flow. It's about participating in the profitability and expansion of robust enterprises. The engine of growth, how dividend growth supercharges your returns. Let's unpack this idea of dividend growth. When a company consistently raises its dividend, it signals financial health, strong management, and often a competitive advantage within its industry. These aren't speculative startups. These are typically well-established titans of industry, often referred to as blue-chip stocks, companies that have weathered many economic storms. The magic truly begins with compounding returns. Imagine your dividend payments aren't just sitting in your brokerage account, waiting to be spent. Instead, they are automatically reinvested, buying you more shares of that very same dividend ETF. Now those new shares also start earning dividends, which are then reinvested again, buying even more shares. It's a snowball effect, gaining momentum as it rolls downhill, accumulating more and more snow with each turn. Over time, this compounding can dramatically accelerate your wealth creation, turning seemingly modest annual payouts into substantial sums. This is the bedrock of intelligent wealth management. This investment strategy allows you to benefit from two powerful forces. First, the consistent cash flow from the dividends themselves, and second, the potential capital appreciation of the ETF's underlying holdings as these strong, growing companies increase in value. This dual benefit is precisely what has allowed this particular dividend ETF to generate returns that have been double that of many of its counterparts. It's not just about collecting income. It's about growing your overall net worth significantly. Building your fortress. Strategic considerations for high net worth investors. For those of you with substantial capital, your investment decisions carry even greater weight. You're not just looking for income. You're looking for wealth preservation, tax efficiency, and robust risk management. When considering this dividend ETF, or any investment, for your significant financial portfolio, several key aspects come into play. Firstly, diversification. While this ETF itself provides broad diversification across many companies, it's crucial to understand how it fits into your overall asset allocation. Does it complement your existing holdings, or does it overconcentrate you in certain sectors? A truly sophisticated financial plan requires a balanced approach. Secondly, let's talk about tax-efficient investing. Dividends, like any income, are subject to taxation. For high net worth individuals, strategic placement of these dividend-paying investments within various account types, such as qualified retirement accounts or trusts, can significantly reduce your tax burden, allowing more of your returns to compound and contribute to your long-term wealth. This requires careful consultation with your financial advisor or tax professional. Thirdly, risk management. No investment is entirely risk-free. However, focusing on dividend growth investing inherently leans towards more stable, mature companies, which typically exhibit lower volatility than speculative ventures. This investment approach emphasizes stability and predictability, crucial elements for older investors and those prioritizing wealth preservation for future generations. It's about building a solid foundation, not chasing fleeting speculative gains. Your path forward, actionable steps to harness this power. So, how do you gain access to this powerful dividend ETF and begin harnessing its potential for your own financial growth? The process is straightforward, but it requires diligent attention to detail. Step 1. Research and due diligence. While I've highlighted its remarkable performance, it is absolutely essential that you conduct your own thorough research. Understand the specific holdings within the dividend ETF. What companies does it invest in? What are their fundamental strengths? What is the expense ratio, which is the annual fee charged by the fund? A lower expense ratio means more of your money is working for you, directly impacting your net returns. Step 2. Consult your financial professional. This step cannot be overstated. Before making any significant investment decisions, sit down with a trusted financial advisor. They can help you integrate this dividend ETF into your existing financial plan, ensuring it aligns with your specific financial goals, risk tolerance, and tax situation. They can provide personalized insights into retirement income strategies and estate planning that are crucial for high net worth individuals. Step 3. Implement and monitor. Once you've done your homework and consulted with your advisor, you can proceed with the investment through your chosen brokerage account. Remember the power of dollar-cost averaging, investing a consistent amount regularly, regardless of market fluctuations. This smooths out your purchase price over time and reduces the impact of short-term market volatility. And importantly, once invested, regularly review your holdings. The market is dynamic, and while this strategy focuses on long-term stability, periodic reevaluation is a hallmark of intelligent portfolio management. Embracing a future of financial abundance. My friends, the journey to financial independence and long-term wealth is a marathon, not a sprint. But with the right tools, the right knowledge, and the right approach, you can significantly accelerate your progress. This dividend ETF, with its demonstrated ability to generate 2x returns compared to many others, offers a compelling avenue for financial growth and wealth creation. It's about more than just numbers on a screen. It's about providing you with the peace of mind, the choices, and the legacy you envision for yourself and your loved ones. It's about turning that quiet unease into a profound sense of financial security and abundance. Your money can work harder for you. It can generate consistent income streams, and you can build the lasting wealth that provides genuine freedom. Call to action. If you found this discussion illuminating and empowering, please give this video a thumbs up. Your likes help us reach more individuals seeking to enhance their financial literacy and achieve their financial goals. And if you haven't already, subscribe to our channel for more deep dives into investment strategies and wealth management. Most importantly, share your thoughts and questions in the comments below. We love hearing from you and engaging in meaningful conversations about your financial journey. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.